the current prices are more than 120% higher than the previous high before the 2008 crisis. There is a good chance that gold price would drop 15 to 30%. And now I'm gonna tell you what's really gonna happen. You sell your shares and the market is growing. You're gonna be waiting for a crisis for a week, 2, a month. Welcome to the Coin Post. The stock market is gonna collapse again, and we may even break the record for the previous March crash, which is the highest speed in the history of the S&P 500. I'm sure you've heard such statements and predictions, and they name different dates. For example, the nearest one is the November 3rd US election, and unless a winner is identified, then at best the stock price could drop 5 to 10%. At worst, we get a full second wave of the stock market crash. Though there are other predictions too, so many point to a market collapse in 2021, with most analysts naming the end of winter or midsummer. The second collapse could be related to a wave of bankruptcies or less government support for business and corporations. By the way, taking into account the current corporate debt of $10.5 trillion, if the Fed phases out the support measures, there will be not just a wave, but a real tsunami of bankruptcies. I suggest we discuss two important issues today. The first one is how big are the chances of the stock market to crash again, and as we remember in March, everything else would collapse too. And secondly, what to do in that case? To sell, to buy, to have cash, or some other options? We're inviting you to join our community and subscribe to the channel. Let's start. The stock price is revalued, which is the main argument of those who speak of the imminent stock market fall. If you look at the figures, the March crash was not the crisis that unloaded the markets. Since then, the S&P 500 has grown by more than 60%. Besides, the current prices are more than 120% higher than the previous high before the 2008 crisis. The following indicators show that the market has gone mad, prices have exploded, and a catastrophe is looming. Here's an example of the Shiller PE ratio, which shows the price to average income ratio over 10 years. It's now higher than when it was during the Black Tuesday of 1929, which started the Great Depression. It's also important to note that the index was higher than it is today only in 2000, before the collapse of the dot-com bubble. Or let's take Warren Buffett indicator for instance, which shows the ratio of stock market value to the US GDP. It's at its peak, exactly where it was before the crash in 2000. The figures are enough to confirm the huge overvaluation of stocks, but can we say that we'll definitely see a new crisis? In the modern context, we must take into account the unprecedented government support for markets, and the fact that the market is rebought is not enough to start the crash. There has to be some kind of catalyst that could trigger a panic sale. There are various assumptions here, two of which I made at the beginning of the video. They could be a trigger, but we can't say exactly that this will be the reason. What we can do is prepare for the future challenges, and about that, next. The money printing machine is working at full capacity. The market has got $3 trillion, and that's not the limit. There's gonna be hyperinflation, and the only safe option seems to be the real money, like gold. This is a recommendation that we've been hearing for the past few years, and in 2020, it's a major thing. Whether the US dollar is really gonna collapse because of the printing machine, I recently told in another video. If you haven't seen it yet, go check it out by clicking the link you see on the screen or in the description box, so that you better understand how big the threat of hyperinflation is and how it works. And now let's find out whether you should turn all your money into gold. They say that Warren Buffett bought it, which is fundamentally wrong. Buffett bought shares in a gold mining company. He sees great prospects for this business and a good price to buy. But just because the world's various financiers say so, doesn't mean that Buffett is dumping dollars for gold. Also, many people now cite Ray Dalio's investment in gold and his comments about getting rid of cash. But then again, Dalio doesn't buy the gold. And lately he's been giving the right market advice, but for some reason he doesn't follow it himself and he's losing money. I even have a whole video about Ray Dalio losing $20 billion in the growing market. I'm not telling you this meaning Dalio and Buffett are doing something wrong. No, I want you to realize that public statements, information in the media, and from various experts and bloggers should always be checked and questioned. If you look at the previous gold price rise, it coincided with the recovery of markets of the 2008 crisis. Meanwhile, gold fell with stocks in both 2008 and 2020. So if you take into account the theory of the inevitable second wave of stock market crash, then there is a good chance that gold price would drop 15 to 30%. And next, we're having other ways to protect against the second wave of crisis. The advice they give a lot now is to sell everything and buy it back after the crash. It kinda makes sense, as prices are now high, the vast majority of long-term investors should have a good return on their long positions. Well, the odds of a fall are really good too, so the idea of cashing out and waiting for the market collapse seems completely logical. But this was the theory, and now I'm gonna tell you what's really gonna happen. You sell your shares and the market is growing. You're gonna be waiting for a crisis for a week, 2, a month, or even 6 months. But the S&P 500 keeps going up, and you end up buying your assets back, bearing losses because the prices would have already gone up 5, 10, maybe even more %. And after that, the market makes a U-turn and goes to correction, because you shouldn't speculate, especially if you can't do that. So it would be wiser not to leave the market completely, but to rebalance your portfolio. Now they say Buffett sells banks and airlines and buys gold. In addition, he has more sales in 2020 than purchases. But the point of all of these movements is that Buffett is getting rid of businesses that become too risky. And so he's investing into assets that will be the least affected by a possible crisis and continue to make a profit for their shareholders. FYI, I never give financial advice. I just share information with you, my dear audience, and tell my own conclusions. But in this case, I support Buffett's right hand, Charlie Munger. He teaches that, on average, crises come every 10 years. And it's okay if you have companies in your portfolio that can easily withstand a 50% drop in stock prices, and after a while, they will be much more expensive than they were before the crash. But if you do decide to cash out, there's another option to protect against the crisis. Those who are willing to risk and earn, or at least minimize their losses, can use such a tool as options. The point is that before the expected market collapse, you sell shares, and with the money you earn, you buy options at current prices. Compared to futures, with an option, the contract owner decides whether to perform it, and there's two options then. If the market falls as you predicted, then you renege on the deal, pay a service fee, and buy your shares back at low prices. The difference between the sale price and the purchase price will be exponentially greater than the option price, so you get a profit. But if the market went a different way, and it's grown, then you execute the option and you buy shares back at the old prices. In that case, your losses would be minimal, like the commission fee. In reality, of course, everything would be much more complicated than in my example. But in theory, this option to protect against the risk of the stock market crash is quite reliable, and millionaire Michael Burry uses it too. Share this video with your friends on social media and messengers to let them know how to protect their money from the crisis. And subscribe to our channel and ring the bell not to miss new episodes. That's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.